This is the Todd Shapiro Show on Canada Talks, SiriusXM 167.
Frank Holmes live on air. How you doing, my man?
Outstanding that I'm talking to you.
Oh, that's too kind of you. Very kind. Whereabouts are you now?
Sunny San Antonio, Texas. Not a cloud in the sky, and it's 70 degrees.
Oh, rubbing it in, huh? Thanks a lot, Frank. Rubbing it into us Canadians.
But I'm coming up there tomorrow. I'm coming up there to Toronto.
Yeah. You travel a lot. How is the travel schedule? How do you compartmentalize and adjust family, travel, business? Any advice, tips you can give to us who have to do that for a living?
There was a great book written years ago called Six Thinking Hats by Rhodes Scholar Edward de Bono, the father of lateral thinking. And and then you had another one called Six Action Shoes. So the fact that you have to, what's the best, Betty Crocker recipe for this duty, this duty, this duty, and your frustration comes when you got the wrong hat on. It's just recognizing that. So it's an easy read. Google it, and they'll give you book summaries. There's lots of images that summarize it for you. But it's how fluid can you move from hat to hat to hat. It allows you to have less stress. But I was in Zurich, and I went up to St. Moritz, and that was exciting because it was a very small group of crypto finance. And the guy that put it on was an angel investor in Facebook. So he's done lots of technology, and there's such a big push on blockchain and crypto. And it was interesting. They said that Lehman Brothers, if it was on blockchain, wouldn't have gone bankrupt because they were able to calculate afterwards it was only $7 billion at risk. It wasn't $400 billion. So that crisis is because they couldn't put their arms around all the information, and it was on a blockchain open ledger. They could have quickly calculated it's not this astronomical $400 billion.
Frank, this is interesting. I'm glad you brought up blockchain and crypto. As we know, in sort of the small cap world, at least here in Canada and some of these publicly traded companies, it was a tough year in the space, and I think people aren't hiding from that. But there's still a real big optimism within the community. And is it sort of misguided now that maybe people are only judging it by the sense of a bit of a decline in the markets, but really there's still a strong sense of the world really adapting and just growing this space still, despite maybe what the markets would have said?
Well, it's a great question because it was brought up by these incredible speakers. The Winklevoss twins were there. A young guy that lost his job in 2009 and set up a crypto trading house that's worth $8 billion today. We had this. So that what they all show with this chart of the Gartner hyper movement, and so you get this blow off, and they show the internet did the same thing, and Google came afterwards. The Facebooks, everything else comes afterwards, and they said that the blockchain peak took place in 2017 December with the launch of the futures market, and it comes crashing down. And the following year was cannabis. 2018 was cannabis.
Yep.
And so they say they go through these massive corrections, and where people become despondent, disillusioned, frustrated, and the smarter people all of a sudden start applying that technology, or it's going to be CBD and CBD oils and creams or whatever. I don't know who's going to come out to become, that big player, but it's just important to recognize when they go exponential on the upside in both price and dollars traded that they fall, the square root of that number. And now we're in that constructive phase. So the bottom in Bitcoin took place with J.P. Morgan, which used to trash talk it all through 2018 till February 2019, a year ago, when they came out with their stable coin, and that was the bottom for Bitcoin. And so there's just this movement that there's more interest, and there's more companies using, particularly Ethereum. And I'm much more focused on Ethereum because Hive Blockchain launched itself as the first industrial scale crypto mining company. And we, first of all, were mining Ethereum in Iceland and then Sweden. And so we're about 3% of the world's capacity.
And I love to hear that as a publicly traded company, of course, High Blockchain, check it out and always do your due diligence on this stuff. And of course, mining Ethereum on an industrial scale. And you also use green energy because that's been a concern with the blockchain community and people away from it is how do we also conserve energy doing so? Can you speak to that a little bit? Because I find that fascinating. I like the fact that that's a mandate.
Yeah, it is a very important mandate for this, and we're using hydro energy in Boden, Sweden, and Iceland is thermal energy. So, but the real focus for us right now is where energy prices have fallen dramatically is Sweden, and the warm weather, the warm winter has been a big benefit for us. So you can lock in your energy prices for 12 months. Which is so good, and so it's green energy, and that's all we're going to do is green energy, and that's the strategy we have. And there's lots of stranded green energy around the world, and so I think that's something else I learned in this process.
As you look and speak to the blockchain community, and I guess more specifically the crypto community, because there is a bit of a difference. Do you? I mean, I know it's tough for you to say this, because you want to be careful without sort of forward thinking and all this kind of stuff. But are you bullish still on the sector? I mean, are you confident in its resurgence?
Yeah, I give you as I said earlier, there's the Gartner hyper cycle, and we've just been through it. And the Canadians have had one too. Hive ushered in the whole blockchain phenomenon in Canada, and behind it came $1 billion, and most of it came from U.S. investors because it's the only place where you can really get formation of capital, risk capital, and then it rolled over with the futures market. But then we have cannabis, so I think it's really important. You go through this crash. You collect yourself. Hive has been through other issues I've had to do with corporate governance, and it's all about ESG is an important acronym for making investments today in the mining sector: environment, sustainability, and governance. So I've had to clean up a lot of issues there, but the company is profitable. And I remain, very positive towards. I'm going to go down to Cancun with Trevor Gaverko for the Satoshi, where all these sort of intellectuals behind this get and scientists and talk about the future and what they're doing. And this week I spoke at Harvard to an MBA class, and they had consensus there, which was speaking regarding their commitment to Ethereum. So it just reminds me, we had the internet bubble. Remember at the beginning, everyone's eyeballs, stocks went up parabolic, they crashed 90%, and then all of a sudden apps started coming out and more uses. And I think that's what we're going to start seeing going forward in Bitcoin and Ethereum. I think long-term, Bitcoin becomes like art. It's going to be like having an Andy Warhol piece of art. But Ethereum is going to be the backbone for so much because of its smart contract structure.
Frank, real quick question. I know I asked you this a few years ago when I had you on the program when we taped live and Polymath, actually, when I met you and Trevor Gaverko and the entire team. How long have you been sort of a capital markets guy for? How many decades now? Not trying to age you here.
I turned 65, and but I just ran a half a marathon, so I'm feeling good. And I try to do my push-ups at my age every morning to wake up. And
I love it.
Another notch. And I know I've had too much of a late night. I have to do them in sets of 10. But I graduated in '78 from Western University. And went right in the investment world, and went with a little boutique that ended up being, when I left, absorbed by Canaccord, and we were dominant in the capital markets in microcap stocks. And my first financing I worked on as a banker, because I went from usually a research analyst to a trading desk to banking, was Franco-Nevada, and I was just blessed to have mentors like Seymour Schulich and Pierre Lassonde. And Ned Goodman, another classic gentleman that taught me so much in that formation of capital. And I'm celebrating being in Texas for 30 years. So I like to tell people that I'm a Tex-Can. Y'all come back, eh?
I love it, man. That's brilliant. We will come back. I got to go there for the first time, actually. And I guess I asked you how long you've been, though, because I'd love an update on your role at U.S. Global Investors and really how you've witnessed the capital markets change since you first got into the industry.
Well, the biggest, innovation technology is one component of it, but it's also the layers of regulation. And so regulations can, change the direction of a river or money flows. And we've seen that. And a lot of it comes out of Europe. The EU socialists have basically destroyed London. It was the most important financial center in Europe. And slowly they decimated with rules and interpretation, and that's what led to Brexit and the suffocation of regulations. And then when I was in Switzerland, the Swiss authorities were telling me that they're so happy about Brexit because it stops the onslaught of attacks by the EU against Switzerland, and so that they both want to be financial independent centers and innovators. So I think that the biggest change has been this sort of regulations, and there has to be something, if you don't streamline it. And I write a lot about this, it's a binary model, Todd. When you look at government policies, they're either monetary or fiscal. And monetary bifurcates again. It's like zeros and ones, digital world. It's either money supply or real interest rates. And when it comes to fiscal, it's tax and spend, and taxation can be regulations because it's a form of taxation. And so what's happened in most of Europe and a lot of the world since 2009, 2008, is they're relying more on monetary policy and not fiscal policy. And fiscal policy is a runaway regulations, which is another form of taxation. And they keep printing money and zero interest rates like we had in August of 2019. Denmark was offering to pay you to take out a mortgage. I mean, it's just ridiculous. And if you want to have a checking account or bank account, you have to pay for that privilege in Switzerland. And so you're seeing this use of monetary aggregates, and the more they keep using it, without fiscal streamlining of regulations and taxation, then the bitcoins, the cryptocurrency, gold, art, these other real assets become much more significant. And I think a lot of people don't realize they print this funny money like in Switzerland. They say, okay, we're going to go and offer zero interest rates. You come and buy my 10-year government bonds with zero coupon. Oh, no one's going to buy them. Okay, well, we'll buy them. And so they create, $5 billion. And what do they do with that money? They go and buy stocks. They own 15% of the stock market, of their stock market. They're big shareholders of Apple. In Japan, they only buy Japanese, so 15% now of the Japanese stock market is owned by the Federal Reserve of Japan. And so this coming back to this regulation, they're not using fiscal disciplines, and that's something that America's done. Except for the trade wars, the increase of regulations, the tariff is, but now they get them back down. But they stopped regulations that you had to cancel to for a new one, and you had to think of ways of streamlining what they're doing. So that led to this big economic boom in the U.S. Lower taxations means that all of a sudden they get more tax revenue. And that's not so. It's not how the Europeans feel. So they drive the equation, and they're very smart at words, Todd, like harmonization of tax and regulation. You know what that means? It means raise your tax rates and regulations to EU standards. And they tried to stop all investment conferences. They didn't like what we went to the Bahamas. All that shouldn't be. It only should be regulated by the government. The formation of capital should be controlled by the government. So you see this sort of battle that's going on around the world on free markets, a free economy, and socialism. And bottom line is you would never have a Facebook, an Airbnb. All this stuff comes from a free economy. BlackBerry, that idea comes from a common law country which allows the formation of speculative capital, and that led to so many exploration success stories in Canada, the largest epicenter for mining in the world, gold mining, silver mining, whatever it is, it's still the most dominant place is Toronto with that. and it's because they have this common law structure. Europe is civil law, and so I think that's another reason for the idea of the British separating, because when you look at Singapore as a success story, Hong Kong, New Zealand, Australia, they're all based on common law.
Frank Holmes, this is all fascinating stuff. And to simplify it a little bit, I don't speak at Harvard, but I speak to people about capitalism and this sort of new war against capitalism, which confuses me, quite frankly. And you brought up the examples of Facebook, and I'll bring it to, say, the Amazons and now the Teslas, and whether it's Twitter or these social medias. These are things that have simplified people's lives, that have helped make them connect in a much far greater reach than they ever could, which helped them now drive electric cars, helping the environment. And I'm always amazed that people are, on one hand, so upset with the idea of someone becoming a billionaire or this capital structure where these companies can thrive, but yet here they are not only employing thousands and thousands of people, they're making revolutionary changes to simplify your life and make it better and more environmentally friendly. And as well, they're giving you an opportunity here to perhaps go and do something on your own. And I guess I'm just confused, Frank, by why people get so upset on one hand, yet really they're not realizing supporting it on the other.
I think I have to agree with Jordan Peterson that says it's universities and even the high schools. They're controlled by strong unions, and the strong unions have a mandate that's very pro-socialistic. And that's what you wrestle with. So these kids get a very biased and polluted piece of information. And it's tragic, but it's real, and it's quite serious. What their expectations are and their intentions, and they don't really dig down and study the research of look at the EU. There's 35% unemployment for kids under 25 in Spain and Italy and Greece. So they're all trying to get into England because there's job opportunities. There's no opportunities. And when you go to those other beautiful countries for their food and music, et cetera, lots of fun for tourists. But the unions are so entrenched, young kids can't get a job.
Frank, I got to cut you off here real quick. I apologize. I got to take a quick news update. Do you mind holding through the next hour, just like in 2 minutes? I want to come back, pick up this conversation. Also, I want to ask you about gold. You mentioned gold and art and Bitcoin. It was interesting how you grouped those all together, a few being tangible, some say Bitcoin not. But I want to ask you about gold, and you're a gold guy, and your belief in gold and why that's an attractive investment. Is that cool?
Great.
Okay, we got Frank Holmes waiting for us online. He's been very patient. We appreciate it as we did the news break live from San Antonio. Hey, Frank, thanks again for waiting for us.
That's good, great, Todd. I love your energy.
Hey, listen, you know what? I have a lot. I don't take this for granted. I'm a super busy guy, but these are some of my favorite 2 hours of the day. Part of the reason being is you get to talk to people without people picking up their phones and looking all over we're concentrated on a conversation that's kind of old school in my opinion. So I come in it every day being just as excited as the last one. You, on the other hand, man, you're best known for your gold and your gold expertise and expertise in precious metals. It's a space you've even written a book called The Gold Watcher. What makes this asset attractive to investors, in your opinion?
From a historical point of view, I'm coming up with a new book called The Great Love Trade. And if you look at history, citizens or countries that have always had gold have weathered storms, financial storms, whatever it is, war. And we go back to the history of Europe and look at Japan. The Japanese invaded China to get gold. First thing they do is went for the gold because no one was going to take the yen. They needed oil. The transfer was, I'll give you oil for gold. And Hitler, who was a socialist, which a lot of people don't realize, was also anti-gold, except for he would go into a country to confiscate the gold because he needed to get oil for his machinery. And Churchill was smart enough and saw that early, and he had all the gold shipped to Canada. And then the U.S., after supporting, they stopped getting worried that England would lose a war. They said, no, we don't want to take paper anymore. We want gold. So there was a transfer of the gold from Canada going into the U.S. For the U.S. to make weapons for the U.K., the British, to fight the Germans. So now we come back to Vietnamese people, the boat people, the first to get out had gold. Even recently in Syria, the women are not allowed to have bank accounts. And they would have 24-karat gold, and they go to the hospital, and they would get immediate care. And those that have the gold were the first to be able to get out, to buy their way out. So you hear this story over and over around the world as a global traveler. And the one that I love is India. Indian women wear 6 times the amount of gold, that's in Fort Knox.
Are you kidding me? That's a lot of gold.
That's a lot of gold.
Well, and wearable jewelry was a form of carrying it to different markets or so, and then you would offer it up for the services or products. So that's sort of why people started wearing gold, from what I understand, because it was a way to carry it, and it was harder to put in pockets, or they maybe didn't have pockets in the day. So they created jewelry of it to then exchange, and it was just an easier way to carry it from place to place.
So 60% of all this gold demand is love. And the love is cultural and GDP per capita. So if we look at the past 25 years, the GDP per capita has been the strongest with China and India. So Chindia is affectionately known as China-India. They're 40% of the world's population. Now, if you dust off the history books, in 1840, they were 40% of the world's global economic activity. And they fell down dramatically to less than 5% and has slowly grown. And when we look at that GDP per capita, the biggest now is China, then America, and then you have Japan and India. So what does that mean for gold? 25 years ago, China and India consumed 10% of the world's gold for love. Today, it's 53%.
My goodness. For investment. For security.
For investments and for security and for love. And so what happens is gold appreciates, probably because the rupee has been declining, and so gold is going up, and women will say, well, I like this new design, and they trade. They go in and buy a new gold design, and all they do is each time the gold goes up 10%, they're in the money. So they're still wearing it. And what they found is that the rising GDP per capita, they just buy more gold. And what we're living in right now, if you go to the Toronto airport, you'll see all these at the duty-free ads with the Year of the Rat and everywhere. Well, that same ad is in Dallas airport, everywhere, and in Zurich. So they're trying to sell you gold jewelry, gold anything, as the Year of the Rat. And I think that to me is just remarkable because this rising GDP per capita, that you know this, that China now has more middle class income earners than Americans?
I didn't know that, no.
So there's also a strong correlation of them consuming more gold. And so if you have a big score and it's a Year of the Rat, well, you're going to get a gift. It's going to be, a gold rat, a gold tiger. I'd prefer the tiger or the bull, but the rat means they proliferate. They have lots of babies, so that means you're rich. As a symbolism, it's all from a gregarian society, and so their zodiac is these animals, and so coming back with that sort of thought process. The airlines industry, and I launched a Jets ETF because I was so frustrated, and I noticed after 2009 that I had all of a sudden the price of my tickets were going up,
yep.
And my options to travel all of a sudden were dropping. Like, that path is gone, you have to take this other path, and it costs you more. So then I said, well, how do I make money with this? How do I, get even? Is there an ETF that has this? There wasn't. So I went and launched Jets ETF on the New York Stock Exchange, and it's done exactly that. And I remember I first launched it. Buffett hates the airlines industry. I said they changed. They make so much money from these ancillary fees that in 10 years they've gone from making $3 billion a year. That is credit cards at the beginning. Then they start charging for your bags.
Yep.
And then they start charging for changing your ticket. Then they start charging. Well, today it's going to push through $100 billion of ancillary revenue that offsets the cost of energy.
Brilliant as an investment, frustrating as a traveler. But, that's just the way it is. It's basically a monopoly. There's only so many options, right?
Well, especially for Canada. I feel sad for Canada. You just don't have – you got Air Canada and WestJet. I mean, really? That's not much for options. And even in Europe, there's all kinds of – in other countries, lots of smaller airlines do airlines intercountry. But what's important here is that the rise for demand for gold is rising GDP per capita is very highly correlated. Like we're talking about an 88% correlation. And if you look at airlines, tourism, and they're correlated, highly correlated. So I remain, very, very, bullish on those sectors because there's nothing but policies in to increase this GDP per capita.
Frank, you also have an interesting way for people to gain access to the gold space if they're looking to invest. And this is what I like. You make this, you said get even, or here, there's an opportunity. And that's what you do for individuals as they're learning about the space. People fear it. How do I buy gold? You've made that accessible. How can we buy gold?
Well, there's a thesis that's been tested over and over, and Ray Dalio from Bridgewater is the largest hedge fund in the world. And he's always advocated that you have between a 6 and 15% weighting in gold. I've always advocated the 10% golden rule. And what that means is that you have 10% exposure to be gold stocks, bullion, 24% gold jewelry. It doesn't matter, but you have this exposure, but you rebalance every year. So the years that gold outperforms the market, you take those profits and you buy the stock market or bonds. And the year that gold underperforms, will take profits from the year bonds and buy gold. And it really helps to lower the overall volatility of your portfolio and gives you that sort of comfort, that protection. And what's interesting, in the past 20 years, 80% of the years, gold has been positive. And gold has outperformed the S&P 500. So hard for people to believe this. So gold is, and now gold stocks, that's a different animal, because a lot of the gold stocks did a really bad job on what they call deployment of capital. They waste a lot of money. They didn't find anything, and so they basically put it in the penalty box, except for royalty companies, gold royalty companies like the Franco-Nevadas, Wheaton Precious Minerals. Like these are just great companies, high profit margins, etc. So I launched an ETF, and it's called Go Gold, and it's GoAU. It's listed on the New York Stock Exchange, and I spent about 8,000 hours back testing to try to find out who buys, what do they buy, when do they buy, and I found that the quant funds are about 70% of daily stock trading, and they're basically using Google on steroids based on natural language processing. They look at all the press releases, they look at everything, and they move markets up and down in a precedent quickness. And it's not high-frequency trading, it's high-frequency research. And so I applied that, and I back-tested, and it outperformed the Canadian ETF, the iShares, and it outperformed the GDXJ 92% of the time on rolling 12-month periods going back over 12 years. So past performance, no guarantee of future results, but that's a high probability of a three-point shooter. That's a great person.
Without a doubt.
I said, okay, launch it. And in 2 years, it's done exactly that. It has outperformed them. It's 25% ahead in 2 years of the Canadian gold equity ETF, and so I'm really happy that it's done what it's for the shareholders. So, and it's inexpensive, 65 basis points management fee, liquid, and it's basically, it recalibrates the three big royalty companies, or 30% each quarter, but then it picks all these other stocks from big market cap down that they have to have the highest cash flow returns on invested capital. They have to demonstrate everything on a per share basis. So they do a dumb merger, they're gone. If they raise money and they don't increase production, they're gone. So you really have to be aggressive each quarter doing a portfolio turnover, and that's how it outperforms.
Love it. Sounds like you got your own great compliance within that ETF to protect your investors and the investor shareholder money. Go AU. Frank Holmes, what I would like from you, my friend, is to be able to do these, a few times a month, if you wouldn't mind. Quick 20, 30-minute hits. I love your brain. You're a mentor of mine away from this. I've always taken such great pride in having a personal connection with you. And I just think that the expertise that you show in all fields and capital markets especially to help share this advice and this knowledge with our listeners is only so valuable. As I always say, I have no special talents, but I only passionately curious. That's a line from Albert Einstein. I'm so passionately curious by everything going on in Frank Holmes' head. I would love to be able to share that more.
No, thank you so much. And I like to just share, like, at the end here. When I gave my keynote speech, there had 4,000 people in Vancouver Sunday morning, and it was unbelievable. The speculative interest in exploration again, and I reminded everyone at the very end, that and researchers now demonstrate this. You have to count your blessings, and as my mother always said, life is either a lesson or a blessing. And if you don't give gratitude for your blessings, then you won't get any more. And we all woke up today, and you and I are talking today. That's a blessing.
Yep.
And you have two beautiful young children. That's a blessing. And myself, a beautiful young daughter and older sons. I'm blessed. So when we look at that, there's a study done, I think, by MIT, that when people have positive intentions and expectations, then there's a higher probability of them capturing opportunities. Like attracts like, and then, you're right, and then you learn more and capitalize on some opportunities that present themselves. I love this stuff, man. And I had more people come up to me and say they love that than that stock you had an idea about buying.
Well, I mean, it's a real connection, and it's real engagement, and it's authenticity at its best. And you do that so well. You combine both, and we're all better for it. So can I bug you from time to time, get you back on air?
Anytime, my friend, anytime.
Frank Holmes, thank you so much. Go and give him a follow at Bulldog Holmes. Very candid on Twitter, which we love to.
Right, and usfunds.com.
Perfect.
I write every week. I have 50,000 followers in 180 countries. usfunds.com.
Thanks, Frank.
Cheers.
This is the Todd Shapiro Show on Canada Talks, SiriusXM 167.